If I had to learn investing all over again and had to scale back to my 400K portfolio, this is the exact plan that I would follow. The first step is education. Now, I don't mean watching hype videos or chasing stock tips on YouTube. I mean building a foundation. Now, I went back to basics with books like The Intelligent Investor, Security Analysis, and learning the language of investing. What a balance sheet even is, what are the different ratios like PE ratios, what earnings means, and how to actually value a company. Think of this as learning the rules of the game before you start playing with real money. The second step is to create a system for analyzing stock. My checklist became my compass. I look for PE ratios under 20, price over free cash flow under 15, net margins above 10%, ROE above 15%, ROA above 7%, and a manageable debt to equity ratio under 1. Now, these numbers might sound boring and confusing, but the books I mentioned in step 1 will help you explain all of these. And these matrix and these numbers are the difference between gambling and investing. And once you understand them, it becomes clear that why some stocks stand out and while some never make the cut and never recover and go far ahead in the long run. The third step is actually putting money to work consistently. Now, I didn't start with, lump sums. I invested monthly into index funds like the S&P 500 while picking just a handful of individual stocks that passed my test. This combination of index fund and individual stocks at the start gave me the discipline to stay invested without chasing shiny objects and still learning so much from doing all that. The fourth step is understanding the real estate cycle. This is the big one that most people missed. The markets always move in an 18.6-year rhythm, and it explains why booms and busts actually repeat. Early in the cycle, technology stocks fly, and later on, commodity and real estate cycles, and later on, commodity and real estate go up a lot too. Now, late in the cycle, cash and deleveraging mattered the most. And right now, we're near the end of the cycle, which is exactly why I'm stacking up cash and keeping my exposure to the market very, very small. But when the market actually resets, that's when the next fortune is made. The fifth step is patience. Compounding is slow at first, and that's where most people give up. But if you stay consistent and keep learning, you will wake up one day and realize that your portfolio has scaled up far beyond what you thought was possible. And that's exactly how I crossed 400K before even hitting 30. Now, if you do want to go deeper, I do break down my matrix, my value investments, as well as all these cycle signals and 18-year cycle equations. Link in bio to my free newsletter. But here's the question for you. If you had to start from zero today, what's the first step you would take? Drop it in the comment section. I'll be reading.